Hey guys, this is Terry with Futures.io, and it's my pleasure to welcome Dr. Brett Steenbarger for today's webinar, Mastering Your Trading Psychology. During the webinar, please feel free to type your questions into the questions box, and we'll do our best to answer them at the end of the event. If you're watching this on YouTube, please do us a favor and give us a thumbs up if you enjoy the webinar. And as always, please feel free to share, comment, and subscribe to our channel. It really helps us a lot. You can follow us on Facebook, YouTube, and Twitter at Futures.io. And without further delay, I'll hand it over to Brett.
Okay, thank you very much, Terry, and thank you to all of you who are attending. I see we have over 200 people, and I'm looking forward to being able to share some worthwhile ideas about trading psychology and also respond to questions. In the recent past, I've been doing seminar sessions differently than I had a while ago. And the difference is this. In the beginning, I would do a talk with a PowerPoint, and that would consume most of the time of the session. And then there would be some time for questions and answers at the end. What I found has been helpful is, in a sense, to reverse that process, so that I present a few basic important ideas, but then we quickly go to your questions and my responses apply those ideas to your particular situations. So I would like you to think about the trading psychology challenges that you face and how the three techniques that I'm going to be describing might be applied to help you master those challenges. So in our Q&A, in a sense, we're going to be doing some group counseling. We're going to be doing some group coaching, working on actually applying the ideas to your specific interests. Okay, let's get started. I'm going to toss out two big ideas before we launch into the three techniques that have been time tested with respect to changing our patterns. The first big idea is that what traders identify as a psychological problem is often not the problem. It's often the result of a problem. Now, this is a very important concept. A trader may say to me that they have a problem with discipline, let's say, or lapses in discipline. But the lapses in discipline are not really the problem. The lapses in discipline are the result of something that's going on that's triggering the unwanted behavior. So we need to look beyond the surface description of the problem to figure out what is triggering this behavior. Why is this person acting in this way that ends up hurting their profitability? The problems that we tend to identify are usually the results of some situation that's triggering us. And the three techniques that I'll be describing for you are ways of getting beneath the surface to address what are the triggers for the behaviors that undermine our trading. The second big idea is that most traders, no matter how much trouble they're in, do not usually have many problems. It might feel like you have many problems in your trading, but in fact, most traders do not have many problems. Most traders have one fundamental problem that manifests itself in many different ways. So for instance, I might have a problem with overconfidence and how I think about winning. And that can show up in a variety of ways that undermine how I generate ideas, how I put them on as trades, how I manage risk, and so forth. So on the surface, it would look like I have many problems, but in fact, there's one common denominator to those, and it's that common denominator that we want to address. Because many times, if we can figure out the fundamental issue, then the many manifestations end up being resolved. As a rule, before we address a problem, we have to properly diagnose it. Physicians in the medical field know this, that before they can offer a treatment, they have to come up with a diagnosis. They have to figure out what's wrong before they would give you a medication or before they would undertake a procedure. The same is true in trading psychology. We need to first diagnose what's going on before we try to make changes. It turns out that the psychological challenges that we face can be the result of one or more factors. There are three big factors that can create the problems that impact our trading. The first set of problems are medical problems, actual physical medical problems. Those can affect our mood and those can affect our behavior. And many times we don't even look to the body. We don't look to medical reasons for why something might go wrong in our trading. And yet it is surprisingly common. So for instance, let's consider the trader who lapses into overtrading. They come up with a plan, but they don't trade their plan. They take many more trades than they should trade. They take marginal opportunities, and they end up losing money as a result, and of course becoming quite frustrated. And so they try to create rules, and they try to create reminders on their computer screen to discipline themselves, but they keep overtrading. Many times, this is the result of a medical problem known as attention deficit disorder. A significant number of people in the general population and a significant number of traders have problems with their attention span that may or may not be accompanied by hyperactivity. And many times this is identified early in life, and it often shows up as being very active as a person and very distractible as a person. You're easily distracted. You have trouble focusing attention on different things. You often forget things. You often jump from one thing to another, have trouble following through on things. And this obviously could affect our trading, particularly our problems with planned trading. And so there are medical ways of addressing attention problems that are quite effective. The use of biofeedback to literally train our attention muscles ends up being quite helpful. And the use of certain medications has been documented as being helpful for sustaining better attention. So right away we want to think about, could the problem we're facing have a medical basis? We know, for instance, that a significant portion of the population has diagnosable mood disorders, such as depression. Doesn't mean that they're depressed in the sense of major depression. They may not feel sad and weepy and suicidal, but they have bouts of depressed mood which affect their concentration, which affect their energy level, which affect their optimism and their drive. And once again, there are medical reasons for mood problems. If the brain's neurotransmitters are not functioning properly, then we could try all of the self-help exercises we want, and we're not going to replace the dopamine or the norepinephrine and so forth. And so many times There are counseling approaches that are helpful for mood problems, and we'll be talking about one of them, cognitive restructuring, but there are also medications that can be very effective without major side effects for mood problems. One of the unrecognized reasons people have mood problems is hormonal disorders. People's hormones are out of whack, maybe as a function of phase of life, maybe as a function of something wrong with a particular gland. One person I worked with had an actual tumor on their pituitary gland, and their hormonal output was distorting their mood and their energy level. This happens with the thyroid, and is a reason some people have to take thyroid medications. If you don't get a blood workup, you can't identify those problems, and they can undermine mood, they can undermine energy, they can undermine our trading. So being open to the possibility that the challenges we face in trading may have a medical basis can be very, very helpful. And getting a thorough workup can be a very constructive step. Working as I do, as not only with traders, but I teach in a medical school in Syracuse, New York, I've become respectful of the medical dimensions of the problems that we can face. Now, a second domain, a second area where we can end up with trading problems is not from the body, not from medical reasons, but from past psychological reasons. Sometimes traders take their past and act it out in the present. And in some ways, we all do that. But sometimes unresolved issues from the past can affect how we respond to things in the present. So for instance, if I was a person who was rejected by my parents and felt inferior, I felt put down, I might be especially sensitive to criticism that I face it in my workplace. And it might be constructive criticism, but I find myself overreacting to the criticism in a negative way. The rule among psychologists is that there really is no such thing as overreacting. When we overreact, we're reacting to the present, but also something that's been triggered from our past. And that's why it seems to be an overreaction, because we're responding to more than just the situation of the present. This happens with traders commonly. For instance, a trader may have a sense of inferiority. They haven't made a success of their life, and they're looking for trading for validation. And so when they have a losing trade, they become very frustrated and very upset, not just because of the P&L of the lost trade, but because it's dredging up all of their feelings of inferiority and all their feelings of not being a success. There are other times where problems in people's relationship lives can enter into their trading. And so they're upset about their relationships, and that colors their mood, which then affects their risk-taking. Issues from our past life, our histories, can affect our responses in the present, and there are many, many psychological approaches, especially the three that I'll mention, that can help us deal with those. And finally, third, sometimes the problems that affect traders are not from the past and not from medical reasons, but from situational causes. There's some situation in the present that is triggering the response. A very common example of that would be a market that changes quite a bit in its volume, its volatility, and in the nature of the action. So for instance, recently we had a downside trend day in stocks after a period of fairly low volume activity. We were trading in a range, and because there was questioning about the agenda of the new presidential administration. We saw some large institutional participants hitting bids. Volume was coming in on the downside. That's a shift in regime. It's a shift in how markets are trading, and that can be very difficult for traders to adjust to. It's not a medical problem. It's not a problem from their past. It's a situational problem. The market situation is creating a confusion and a challenge for the trader. Sometimes markets get very quiet. Not much volume goes through, not much movement, and that can by itself be a frustration for traders. There doesn't seem to be much opportunity. So those are the three big reasons why a trader might have some psychological issues that impact their performance. And we want to diagnose as best as we can. And I usually do that by trying to rule out possible medical reasons first, by looking to the past to see if anything might be affecting the present, and finally by looking at what has changed in the recent situations for the trader. Just getting clarity on where problems come from can be hugely, hugely helpful to then figuring out what to do about those problems. Okay, let's get into the three techniques, because these are techniques for addressing both past issues and also current situational ones. These are techniques from the field that's known as brief therapy, short-term approaches to behavior change. These are techniques that accelerate change processes, and that's why the therapy or the counseling or the coaching is able to be brief. These are very active techniques that tackle the root of problems. And all three of these is well supported by outcome research in psychology and psychiatry. In fact, there's a textbook on brief therapy that I am the co-editor of with two of my colleagues at the medical school, and these three techniques are three of the ones that we emphasize in our textbook as being the most research supported. The first are known as behavioral methods. And you've probably heard of behavioral psychology and B.F. Skinner and so forth. Behavioral methods have evolved over the years, and there are some very sophisticated ones that can be tremendously helpful to traders. In the behavioral method, we are trying to change our response patterns. We're trying to learn new ways of responding to challenging situations. So let me give an example. Suppose a trader has some performance anxiety. They're afraid of losing money. And so they end up having a great setup on a trade, but they feel nervous and they don't pull the trigger. They don't execute, even though they can see it's a good idea. That's a form of performance anxiety, just like a public speaker who suddenly goes cold because they're so worried about what the audience might think. In the behavioral methods, you are learning a new response pattern to a stressful situation. In this case, the stressful situation is the uncertainty of putting on a trade. So a behavioral technique that I've written about on the Trader Feed blog and in my books is known as exposure methods. We expose ourselves to stressful events in a gradual way while we keep ourselves very calm and very focused. It turns out that this is the most effective technique for dealing with anxiety problems and for dealing with even traumatic stress. So imagine a situation where this trader with the performance pressure, before the trading day starts, they teach themselves a relaxation technique. They breathe in very deeply, breathe out very slowly, close their eyes, sit very still, in very deeply, out very deeply, they breathe, while they focus their attention on something positive. Maybe they imagine walking in a forest or being with someone they love on the beach. And they're just imagining this very relaxing, peaceful scene while they breathe in and breathe out. That's the first step of the behavioral approach. And they repeat that again and again and again. And sure enough, if you practice that enough times, you can become very good at getting yourself chilled. You can really reduce your body's level of arousal. So your heart rate goes down, your muscle tension is reduced, and so forth. Now, once you've mastered this relaxation technique, then you change the visual imagery. Instead of imagining the peaceful scene, you're imagining putting the trade on. You have a great setup, you notice it in real time, and now you're vividly imagining you putting the trade on. It's almost like you're watching a movie in your head and you're watching yourself execute this trade. And maybe in the beginning, you imagine yourself executing it with very small size. Maybe just a one lot. And then later on, as you practice more and more, you could imagine taking this trade with larger size. You could imagine different scenarios, taking your entry signal in a more busy market, in a less busy market. You could imagine taking the signal when you're down in your P&L versus when you're up in your P&L. All these different scenarios you can repeat again and again, but the key is while you're imagining putting the trade on, pulling the trigger, you're continuing to breathe deeply, breathe slowly, sit very still, and keep yourself chilled. Now, imagine if you did that exercise 50 times before the market opened. Again and again and again and again in mental rehearsal, you're practicing keeping yourself calm, pulling the trigger on a trade. Keeping yourself calm, pulling the trigger on a signal. After you've rehearsed it so many times mentally, you've created a new pathway in your brain. You've learned a new response pattern. So that in real time, when you're actually trading and you notice your setting up, you take just a deep breath or two, put yourself back in the frame of mind that you were in during your practice sessions, and you pull the trigger. Because you've practiced it so many times, it now comes much more naturally to you in real time and without the anxiety because you've trained yourself to stay calm and focused. That's a behavioral technique. You're learning a new response pattern to a previously stressful situation. And that particular technique is known as an exposure method. And as I mentioned, it's very good for anxiety problems. A second technique is known as cognitive restructuring approaches, or sometimes called cognitive therapy. Here, we're not just restructuring our responses to situations, we're restructuring how we think about situations. We become very good at thinking about our thinking, standing apart from ourselves and challenging negative thought patterns that might be interfering with our trading. So for example, let's say that I tend to make bad trades after I have a period of losing and I get frustrated, and that triggers some impulsive taking of trades. It triggers a lapse of discipline. So the trigger here are the losing trades, but more specifically, it's how I'm thinking about these losing trades. Because if I think about my thinking, I realize I'm getting frustrated with myself. I'm saying things to myself like, I can't believe I lost again on this trade. I shouldn't have taken that trade. I keep losing. I'm such an idiot. All that negative, frustrated self-talk ends up creating anxiety and mood shifts. It lapses our concentration, and out of that we can take some marginal trades. So in the cognitive approach, we become very good at identifying and stopping, intercepting our negative thought patterns. One of the ways that this is commonly done is by keeping a cognitive journal. We keep a journal of our thinking, so that in one column we take a look at what is the situation that's caused our reaction or that's been associated with our reaction. The second column is how are we talking to ourselves about that situation. The third column is the consequences of how we're talking to ourselves. So I take a loss in a trade, I talk to myself in a very frustrated way and tell myself what a loser I am. And the consequence is that I become frustrated, I become angry, and I end up missing out on a next good opportunity. That's the consequence. That's the third column in our journal. The fourth column we use to actively challenge our negative thought patterns. So that's where we rehearse by writing down how we want to be talking to ourselves in that situation. If you take a losing trade, how do you want to talk to yourself about that? What would be constructive? If you were mentoring a young trader, you're the mentor. How would you talk to that young trader if they took a losing trade? Chances are you wouldn't call them an idiot and call them a loser. You would be constructive, you would be encouraging, you would be helping them learn from the lost trade. And by being constructive, you avoid the anger and the frustration and the secondary consequences on later trades. So you're using this journal to catch yourself while you're doing the negative thinking and to write out your challenges to that negative thinking. You're reframing that thinking. And again, through repetition, this begins to come more and more naturally so that eventually you don't need to keep a journal in order to change your thinking. You can catch yourself in real time. Aha, there I go again. I'm starting to blame myself. This is what's hurt my trading last week. I'm not going there. How do I want to process this? What can I learn from the lost trade? Maybe there's information in the lost trade. Maybe it's not an uptrend as I thought. Maybe the sellers are starting to take control. Maybe that lost trade, that loss on the trade is information, and maybe there's a good idea that will come out of it. That's a much more constructive way of talking to ourselves about a losing situation. But many times, the key is interrupting the negative self-talk as it is starting to occur. That's where meditation techniques can be helpful, mindfulness techniques, so that we step back from ourselves, so to speak, think about our thinking, and then reframe our self-talk. That's known as a cognitive restructuring approach, and in the research literature, it is the most effective approach for depression and other mood problems that people have, including frustrated mood. And finally, the third set of techniques, people who have read my blog and books will recognize this. These are known as solution-focused methods. These are a little bit different than the behavioral or the cognitive techniques. The solution-focused methods start from a different point. Instead of looking at what we're doing wrong in our trading and trying to correct it, we focus on when are we not doing the wrong things in our trading? When are we doing things right? So for instance, in a solution-focused mode, let's say I'm concerned about being frustrated with losing trades and losing my concentration and discipline as a result. And so then in a solution-focused mode, I asked myself, well, wait a minute. When have I lost money in trades and not lost my focus? When have I lost money in trades and not been really down on myself? What have I been doing during those times? How did I not run into the problem on those occasions? Those are called solution occasions. Those are times where the problem is not occurring, and very often it's not occurring because we're doing something right. And so the approach to change is to figure out what we're doing right when the problem does not occur and just do more of that solution behavior. So to give a very, very simple example, let's say I take a losing trade and I start to become frustrated and I sit back and I think about not even the market, I think about everything in my life that I have appreciation for. My marriage, my children, my 4 rescue cats, everything that gives me joy in my life. And I think about those things and I connect with those emotionally, and maybe I look at a picture that's on my desk where I'm trading, and the frustration of the losing trade is so small compared to the fulfillment of the rest of my life. And in those occasions where I'm more connected to a big picture, I don't like taking a losing trade, but it doesn't control me. It doesn't dominate my mood. I'm putting it in a bigger life perspective. For me, that would be a solution behavior. The times where I don't get frustrated with a loss are times where I'm more connected in a big picture way, with trading being about more than just P&L. So in a solution-focused mode, you will often track in a journal everything you're doing right. If you generate some good ideas, how did you generate them? If you manage risk well, how did you do that? If you end up trading in and out of an opportunity very nimbly, and you sustained your focus, how did you accomplish that? Maybe how you slept the night before was part of it. Maybe how you prepared for the trade that day was part of it. Maybe taking a break during the trading day and renewing your focus was part of it. Those are all solution behaviors, things that work for you. And in my most recent book, The Trading Psychology 2.0, I refer to those as our best practices. The things we do typically when we are most successful. So instead of analyzing problems and trying to get rid of problems, we're identifying strengths, things that work for us, and turning those into best practices that we do more and more of. The bottom line with all 3 of these techniques, the behavioral, the cognitive restructuring, and the solution-focused, the bottom line is that repetition works. Just doing these things once or twice by itself will not create new positive habit patterns. It takes day in, day out repetition, not necessarily for months and months and years, but certainly over a period of a number of days consistently. That way the new patterns are internalized. They become part of us. That's what prevents what's called in medicine relapse. We stick with our changes when we rehearse them and internalize them. So you want to think about creating a daily routine where you are working on these problem patterns in a consistent way so that that work becomes more and more and more automatic. That's really the key to changing your behavior, creating new, different, constructive patterns of behaving and thinking and responding to situations. Okay, well, I've tossed out a few ideas here and a few techniques, and I am very open to hearing your questions now, the situations, the challenges that you are facing, and let's talk about how these techniques and how these approaches might be able to help with your specific issues.
Okay, let's see. I have developed some bad habits like fading a runaway market, etc. Is there an effective way to go about replacing those habits with new ones?
Okay, so fading a runaway market, perhaps prematurely. You know, it's important to be able to recognize momentum in markets. And I'm going to talk from a trading perspective here. I trade the S&P futures myself. When a move is accompanied by volume, we know that volume is correlated with volatility. The more participants that are in the market, the more the market can move at any particular time frame. The reason for this is when we see increases of volume, it is the large institutional participants, like the hedge fund portfolio managers that I work with, that are putting their portfolios to work. At a couple of the funds where I work, the minimum portfolio size is $200 million. That's the small trader. So they can put a lot of capital to work quickly, and it shows up as volume in the trade, and that shows up as volatility. And so when we see breakouts on significant volume and volatility, it means that these large directional participants are revaluing the market. They're establishing a new value for the asset. If you think in market profile terms, that will make sense to you. And so right away, you, as a trader, when you see a move going in a certain direction that you're thinking about fading, you want to see how the volume is behaving, and you want to make sure that you're identifying some exhaustion point where the volume, the activity, is A, dying out, and B, is no longer able to move the market in the original direction, either up or down. So you want to see some change in that volume pattern and in the ability of that volume pattern to move the market. Now, the reason I mention this first, even though we're talking about trading psychology, is that once you identify in your mind what is a market or what is a chart that I am meant to trade and what is a market chart that I'm meant to fade, and you create some rules around that. So for instance, one of my rules is that if volume and volatility are expanding, I don't fade the move. I'm going to get out. I wait for those exhaustion points. Once I have that as a rule, that's something then I can mentally rehearse as part of a behavioral technique. I can use those exposure methods to mentally rehearse not fading a momentum move. In fact, I might even join a pullback. And by rehearsing that again and again and again, I create a new behavior pattern. But having the trading rule first to mentally rehearse can be very, very, very helpful.
Okay. I have a question on time management. How can Dr. Brett do trading, write 3 books, and create content for his blog? I'm curious about his time management techniques.
That's a great question. My time management techniques, it's very simple. I don't sleep. Just kidding. Actually, I don't need a lot of sleep, and I've trained myself over the years to get up very early. That happened when my kids were young, my youngest ones, when they were very young. I needed to get work done, and so the best time was when the house was quiet and no one had awakened yet. And so I learned to get up early in the morning and be very productive with writing and other kinds of things I was doing. And that became one of those positive habit patterns that continues to this day. And so, you know, if I get up at 4 in the morning every day, which I do, then between 4 and noon, that's an 8-hour day. You know, I've already tackled as much by noon as many people might tackle during a whole day. So that's one response. The second response is we're all so much more productive if we're doing things we love. You know, when you're doing something that you really like doing and it's part of your strengths, part of what you're good at and what speaks to you and it's meaningful to you, then it's not work. And so I love to write and share ideas. And so it's not something I have to make myself do and motivate myself to do. It comes naturally. And so I'm able to do it much more efficiently for that reason. If I had to do work I didn't like, I'm sure I would not be a productive human being. So that's a second reason behind the time management. And the third reason is that I do forego many other things that people spend time on. You know, people joke with me if I've seen the show Billions, which has a character who's a trading coach. And I joke about it, but in fact, I haven't seen the show. I haven't seen the show because I don't watch television. Certain things that people do that take up their time, I don't do because I'm doing these other things that I love doing. And so that's part of time management. You prioritize activities and you do the things that are most important. You do the family things, you do the work things that really are most meaningful to you. So all that is part of time management.
Okay.
Yeah, with respect to preparing for the trading day, you really have to be ruthless and identify what is the most effective preparation, what really helps you, and what do you get rid of. A lot of reading of emails and reading of websites, and it's not really all that productive. You want to figure out what truly contributes to your ideas, to your managing of trades, and focus on those activities, and then you'll be much more efficient.
Okay. Let's see. Hi, question for Dr. Brett. My best quality as a trader is my voracious appetite for ideas that help diagnose the market state and figuring out what that implies for trading. However, every time I have a new idea, my eagerness to try it makes me forget my very extensive criteria for any trade, and the result is a loss, despite the fact that the idea should have had a high success rate. How do you suggest that I manage my best quality as a trader so that it does not result in a loss?
It's a great question, and it brings up a subtle point that many times our greatest strengths can also be our greatest vulnerabilities. So, for example, we'll use the time management example, someone who's very productive with their time and gets a lot of things done, they also don't spend a lot of time necessarily sitting around, chatting with people. And that can create a problem that they may come across as not being friendly, not being engaging. So sometimes our strength ends up creating a vulnerability. In this case, creativity is the strength that the trader is talking about, the ability to generate new ideas. It's a tremendous asset as a trader because it helps us adapt to changing markets. But sometimes we become so enthralled with our creative outputs that we trade them prematurely, and we lose sight of the other facet of trading, which would be the conscientiousness, the discipline, the rigor in implementing our ideas. So what I like to do when I generate a new approach to trading, a new idea, is that I start out trading it in simulation mode. I do not put risk on. I'm enthusiastic to try it out, but not with capital at risk. I'm going to take the new ideas and make sure I trade them the right way on paper in simulation before I actually put my money at risk. And so it allows me to practice trading the new idea or the new approach, work out the kinks, and not experience the losses. There are many different platforms that allow for simulated trading. NinjaTrader comes to mind. There's a web-based platform called Trading Sim, and these are ways of practicing trading without putting our money at risk, and I think are great for testing out new ideas.
Okay. Let me see. There was a question I wanted to ask. I'm trying to find it.
Mm-hmm.
What is a biofeedback tool?
Okay, yeah. So if you Google Trader Feed, that's TraderFeed, and the word biofeedback, so Trader Feed, biofeedback, you'll get, as a result from your search, a number of articles that I've written on the topic, and there'll be some links to different tools. But basically, biofeedback refers to instruments that measure our physiological functioning or aspects of our physiological functioning. So, for instance, it can be brainwave biofeedback, where we're monitoring our brain waves. It can be heart rate variability feedback, where we are measuring the subtle changes in the timing between heartbeats, which ends up being a very sensitive measure of stress and well-being. It could measure blood pressure and so forth. And so what we do is we connect ourselves with the biofeedback machine, and we can identify when we are in a state of greater and lesser stress. And then we can do exercises while we're connected to the biofeedback unit that help us lower our stress levels, and that shows up as changes in our scores in biofeedback. There's a company that makes some biofeedback measures of heart rate variability called HeartMath, HeartMath. And so you can Google them. That's just one example of a type of biofeedback. There's a video game product that uses biofeedback called Wild Divine, and you look up wilddivine.com. So I mention these as examples. I don't work for any of these. I'm not compensated in any way by them, but those are products and vendors that I've found to be helpful in the biofeedback space.
Okay. There's a lot of questions. Sorry, give me just a second.
We're flooded.
Do retail traders seem to suffer from these trading psychology issues more than proper hedge fund traders?
Well, good question. Yes, for a somewhat subtle reason. That we'll forget about the hedge fund traders for a minute. The hedge fund folks I work with, I work at several different funds, just to get a job at one of these, you really need to have a lengthy track record of success. And so someone who has major psychological issues just never gets to that point. And so you do see, as a result of survivor bias, different psychological issues for people who are managing large amounts of capital because they've already mastered some trading, but now they're dealing with some new challenges that are part of their trading world. With the retail trader, very often they're trying to do two things simultaneously, and that creates unusual psychological stress. They're trying to learn trading at the same time that they're trading. And so the learning curve itself, with its ups and downs, ends up creating more psychological pressure than just normal trading by itself. So they end up making all the mistakes of the learning curve and have many more things to get frustrated about and to upset them. And that makes it difficult for a retail trader, particularly one who is developing. I think in the prop world, there are prop firms, including one that I work with, that has a very structured learning program and tries to avoid some of those early learning frustrations. But there's no question, a beginning trader goes through the ups and downs. You see it in Market Wizards in the interviews that many of the best traders went through some rocky periods in their development. And I think that does make it harder for them.
Perfect. Thank you. Okay, here we go. I tend to overcomplicate things, too many charts, signals, waiting for perfect setups, etc., and think it is because I'm anxious about making a bad trade. Any tips on how to simplify? I know less is more, but have a hard time keeping things simple.
Yes, and the person asking the question is making a very acute observation, and that is that it's anxiety and performance pressure that is pushing this undue complexity. And so what I have done in those situations, and I've done this in my own trading, is I call through all the things I look at, and I limit myself to a certain number of screens, and I limit myself to a certain number of things that I look at. And I define for myself the minimum information set that I end up using when I make my best trades. So for instance, when I'm trading the S&P futures, there are several things that I look at very regularly. I look at, obviously, the price movement in the index. I look at how each of the sectors within the stock market are behaving. So I'll also compare how the ES contract is trading relative to the Russell and the NASDAQ. I keep an eye on certain market statistics like the number of stocks advancing, declining, and seeing if that's expanding or contracting. I take a look at the upticks and downticks in the market, how many stocks are trading on upticks at any moment, how many are trading on downticks. There are certain patterns there that tell you when buying is drying up or selling is drying up, and you might get a reversal. I look at volume to see who is in the market. That often is an early indicator of a potential trend day. So these are part of a minimum information set that I need. If I don't have that information, I can't trade effectively. Now, there's lots of other information I can look at, but in fact, I have found that when I have done an inventory, taken an inventory of my most successful trades, I haven't used that information. I've only used the information that I mentioned. And so I create a minimum information set, and then I use the relaxation techniques to reduce the anxiety and to help me focus on the information that's most relevant to the decisions I make. So first I approach it from a cognitive vantage point, information processing, what information do I need? And then I train myself using the behavioral methods to stay calm and focused while I am scanning that information. And that I found to be very, very helpful.
Okay. Let's see. Is there a way to manage my fear, managing the fear of losing money, fear of failure? I find myself paralyzed by fear. I recognize it but seem unable to move past it. It manifests itself in not pulling the trigger and self-sabotage in my trading.
Okay, good observations here. Someone is observing themselves well. And, as you read off the question, I thought of something that an early mentor of mine, the novelist philosopher Ayn Rand, used to say. She would encourage people to check their premises. And what happens is we sometimes start with a false premise, and that leads us to respond suboptimally to a situation. So is a losing trade a failure? If you read through the question again, you'll notice that there is an equation of losing money and failing. And the successful traders I work with don't operate from that premise. A losing trade is inevitable. We all have finite Sharpe ratios. Losing trades are inevitable. But losing trades, as I mentioned earlier, are often information. I had a situation recently in my S&P trading where I took a trade, I was short, and it started to go my way, and suddenly a flow came in and some volume came in, and it pushed the S&P futures to a new high for the day. And so what did I do? That wasn't part of my plan, and I stopped out and I took a loss. And then as the market moved forward, it had trouble sustaining that upside, and it started to lose volume, lose momentum. It started to sell off again. It went back into its previous range. And what did I do? I got back into the short trade because now it looked like an even better idea. And so I hit it with more size. And that time it did go my way, and it became a profitable trade. But the reason it became a profitable trade is because the losing trade was information. The losing trade convinced me that this was an even better idea than I originally thought. Even more traders are trapped on the long side. So instead of berating myself and looking at it as a failure and then missing the next opportunity, I'm expecting losing trades, and I'm looking to learn from losing trades. If I have a great idea that I've back tested and it's not working in the market today, something is different in the market today. That's information. How can I profit from that? So losing trades can be positive experiences, and that takes the stress out of the losing.
Okay.
Oh, and I'll mention one other thing. It's something I say in all my seminars, but it's so important, is that the best way to take the stress out of losing the P&L swings, the best way is to make sure you have things in your life that are more important to you than trading.
Okay.
If trading is everything to you, and sometimes you hear people say, oh, it's my passion, and trading is, I live for trading, then your self-esteem and then your whole outlook on life is going to rise and fall with your P&L. That's a very vulnerable situation. You have a very happy relationship life and family life and friends and personal pursuits and things that you love doing. Trading is part of that. You have a diversified portfolio of things that are meaningful to you, And so if trading goes wrong, if any one area goes wrong, it sucks, but it doesn't end up throwing you. It doesn't make you a failure. So I encourage people to develop the broad aspect of their lives in order to weather the ups and downs of P&L.
It reminds me of the person who has their ego tied to like a car. They have this really nice car, and they're so afraid of that car being damaged that they end up not being able to drive it.
Right. Right, exactly. And so you end up not really enjoying the car.
Exactly.
Yeah, that's a really good analogy. Yeah, that if you make something all important, it puts too much pressure on it, too much stress, and it distorts your response to that thing.
Exactly. All right, I'm going to make this the last question because we're almost out of time, but I think this is probably one of the most important ones, and that is, how do we identify our psychological problems? How do we get that, I guess, ability, as some of these other people have been able to self-diagnose the issues that they're having?
We look for patterns. It's a very good question. We look for patterns. So any particular loss in a trade can happen for a variety of reasons. But we look for patterns across our trading. So we keep journals day after day after day, and we look for patterns to our winning days, patterns to our losing days. We look at patterns of when we are happier in life and when we're less happy in life. And we look at what we're doing when we're more successful in trading and less successful. And by creating a list, by creating an overlook of our patterns, we can diagnose what goes on with our trading. So for example, with some traders, we've kept a log of their daily P&L, and sure enough, their worst trading occurs after they've had a string of winning days. Now, that was a pattern they weren't aware of, but it came out as we reviewed their P&L history loudly and clearly. After a string of winning days, they go through a period of losing. And we would take a look at the market, and had the market changed all that much? No, not necessarily. But what happened? Their sizing had increased then. Well, why did their sizing increase? Because after the series of winning days, they became overconfident. That was their pattern. And once they were overconfident, they took more marginal setups. But they took more marginal setups with larger size because they were so confident. And so that created their losing pattern. So you look for patterns in the data, and those will often reveal what issues we need to work on.
Okay. Thank you very much, Dr. Brett, for the webinar and the great information. I'm sure a lot of people here were really appreciated your time and your effort today for this webinar.
Well, I appreciate the interest. I appreciate your support in organizing this, Terry. And please, if people are interested in these ideas, the Trader Feed blog, it's traderfeed.blogspot.com, has a number of posts. There are thousands of posts there. I've been writing it since 2006. And so there's lots of material there. It's free, and there are links. And so you can learn a lot just from those, and also from the 4 books that I've written, but also on the blog site. There are ways of contacting me if you have specific questions. I don't do any commercial trading. I don't do any commercial coaching of traders, individual traders. All my work is with institutions like hedge funds and other money management organizations. So I don't sell my services. I'm not trying to sell myself as a coach to you, but I have put together a number of resources that I'm hoping can be helpful in traders coaching themselves.
Okay, sounds good. Thank you.
Okay, thank you very much, Terry. Thank you for everyone attending, and happy trading.